What are assessment rates?
Each bank might have their own standard variable rate. They might have their own home loan products. But when it comes to working out how much I can actually borrow, they don't actually use these rates to calculate that, do they, Nathan?
Not at all. And today we're going to go through what a bank assessment rate is and how it might impact you on your borrowing capabilities.
Let's get started.
So why do banks use assessment rates?
So the assessment rate is generally 2 to 3% higher than the bank's standard variable rates. And what they're doing is when you apply for a home loan, they're assuming that one day, they don't know when, the interest rates are eventually going to go up. And as your interest rate goes up, it means your home loan repayments will also increase. So the bank's giving you a loan over 30 years. They want to make sure that you can actually afford that loan today and into the future, because realistically, you don't want to get kicked out of your home, and the bank doesn't really want to do that either.
Now remember, as Jaden said, your loan is for 30 years on average. So the bank look historically at data and they see that the average interest rate is around that 7%. Most banks adopt around that 7.5%, 7.25% as an assessment rate when assessing an application.
We might not have known this, but APRA, the Australian Prudential Regulation Authority, the people that look after the banks, adopted a minimum of 7% benchmark in the bank's assessment rate back in 2000, maybe a few years ago. So it's worth knowing that, but the scary thing, or the thing you don't know, is each bank has their own assessment rate. So when you apply for the loan, some have an assessment rate as high as 8%, and it can really make or break your home loan application by not knowing that. So it's worth factoring that in, and your mortgage broker will usually help do that before you even send that application across.
That's right, and that's why you see there can be a difference between one bank's assessment and what you can borrow and another, and sometimes it can be up to hundreds of thousands of dollars different, and that's mainly because of one, the assessment rate, and a few other things that we look at in a different video. So the good news is, not all banks use assessment rates.
Well, Nathan, to correct you, not all deposit-taking institutions. So the technical word, all it means is that most of the big banks will use assessment rates. So they're going to be assuming the interest rates between 7 to 8% and working out how much you can afford on that. But non-bank lenders who aren't Australian deposit-taking institutions, ADIs, don't need to use the assessment rate. While some of them will still put a bit of a buffer in there and work out what your payments potentially will be, it can mean that smaller banks and non-lenders are a lot more flexible and generous in terms of how much they're going to borrow, how much they're going to lend you, and how much you can potentially borrow from them.
So as always, let us know what you think in the comments below. If you have any questions, feel free to hit us up at huntergalloway.com.au.